19 of 19 series are aligned with stagflation mild this morning. That is complete mathematical agreement across the regime map under a stagflationary configuration. The current macro regime is stagflation mild, with a confirmation score of 19 out of 19. In this setup, the macro regime reflects growth momentum decelerating at -0.5838, while inflation momentum accelerates at +0.0081. The coherence score and the confirmation score together quantify how broadly that configuration is expressed across the 19 series. Historically, regimes with a confirmation score in this range have persisted in 52% of comparable cases over 3-month windows, with the most common transition being into an acceleration regime. Compared to recent weeks, where confirmation occasionally dipped, today's full 19 of 19 alignment marks a strengthening of stagflationary structure rather than a loosening of it. In prior data, environments like this have coincided with choppy equity behavior, firmer commodity complexes, and more uneven credit spreads. Descriptions of past price behavior, not guidance. On the signal side, the Treasury curve and long-end yields stand out. The 10-year yield remains below the 4.45% trigger level, while the curve slope T10Y2Y is locked in red momentum, meaning a persistently compressed or inverted structure on the engine's rate of change metrics. In 6 of 9 comparable periods, this coincided with below-median risk-adjusted equity returns within the next 6 months in the historical sample. That is a description of co-movement, not an implied path. Labor indicators sit in the same red camp. PAYMs and ICESA together form a labor market composite that the framework currently classifies as red momentum, defined as a sustained sequence of adverse moves in the growth trend. In 7 of 10 comparable periods, this coincided with the engine's growth composite remaining in decelerating territory over the following quarter. This describes how labor softness and growth deceleration have historically appeared together in the math. On the credit side, spread behavior and risk gauges remain a key lens even without a dramatic stress signal overnight. The MOVE index at 75.2, up 5.68%, but in a normal percentile band, combines with fear readings in sentiment to suggest that rate volatility is not at extreme levels. Yet the framework still categorizes the broader credit risk backdrop as neutral to cautious. In 8 of 13 comparable periods with this combination of normal rate volatility and fear zone sentiment, the data show cross-asset returns skewing more dispersed within 6 months. Finally, the equity and commodity complex is sending a split message. Technology sold off sharply while WTI crude trades near 93.84 with green momentum, defined here as a positive rate of change profile and constructive price structure in the engine's filters. In 8 of 11 historical episodes, where crude carried green momentum inside a stagflation-type regime, Atlas's commodity basket later recorded above median, realized volatility within 6 months. That is a historical co-occurrence pattern, not a forward statement on any single asset. The conditional map is organized around 2 specific triggers. If the 10-year yield crosses 4.45% and holds that level for 5 consecutive sessions, the historical record shows that the inflation composite has accelerated in 9 of 11 comparable instances. In regime terms, that behavior has historically aligned with a stronger mathematical case for transitions toward acceleration from softer regimes. If the fear and greed index drops below 15 and holds there for 5 consecutive sessions, the confirmation score has deteriorated in 7 of 9 instances in the sample. Historically, that has coincided with lower confidence in any single regime label and a higher incidence of regime watch conditions. The map is live. These conditions are being monitored daily across all 19 series. Atlas is the automated rules-based engine inside Given Analytics. Atlas is an automated rules-based engine that does 2 things in parallel. It publishes a view of the broader macro environment, and it runs a fixed 4-layer mathematical framework across 407 symbols every trading day. The environment view and the symbol-level condition log are separate outputs shown side by side. The regime does not select the symbols, the 4 layers do. Atlas monitors symbols independently of any regime label, Members study the outputs and decide what, if anything, to do with them. In practice, Atlas runs price structure, rate of change, risk regime, and market participation across those 407 symbols each morning. When all 4 layers align on a symbol, Atlas records a potential condition state inside the log. These are time-stamped readings that members use to analyze historical behavior, not to receive instructions. Atlas processes the 19 series that define the environment, and it processes the 407 symbols, but the interpretation remains separate and human. May, potential, and educational are the right ways to think about these outputs. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.